equipment. He's the only one.
Yeah, bus, yes, decision.
He's the only one. Nice seeing you, Sean, in the. Okay. Shall we start? Yes.
Assalamu alaikum. We will start the session. Good afternoon, everybody. I am Jamal Abdullah Khamisi, CFO of the company and the investor relation of the management. I would like to thank MSX for organizing this session. And I would like to welcome my team here. My side, Safar Abbasi, the CEO of the company. Bikram Monga, from Monga, the GM Risk and Control. Akha Abu Abdullah, Sam Al Habsi is the Chief Operating Officer of the company. Ram Kumar is the Director of Finance of our company. Sayyid Khalifa, our administration. It's from my right hand side, Honorable Hamza Al-Shirani is our CEO. Sayyid
Highness.
He's representing marketing and corporate relations, followed by the Deputy Director of Finance. So we will start the session and we will allocate enough time after the presentation to your questions and answers. As a disclaimer to this presentation, the aim of this session is to highlight the result of financial of 2020. And the reason for this session is not to promote for any project or investment in our company. Now I will give the floor to our CEO to open the session up by 2 slides. Later on, we'll come up to the numbers.
Thank you so much, Jamal. Thank you very much also for the MSX for the opportunity. And I will just we go through the slides. I will let the attendee to read the slides while I will give my comments in general about our last year's performance and what are the future plans in brief.
Can you share the slides, Rosh?
Yes. Now, National Finance completed another successful year as we continued our journey, the largest financing and leasing company in Oman, by increasing our market share further 47% at the end of 2023. And we are basically aiming to increase the market share even more than what it is. Our investors will be aware our portfolio quality continues to improve alongside our growth, which is reflective via continuous improvement in the bottom line in the past few years. We have invested and established a strong risk management and control framework that complements our above average growth. We continue to carry conservative buffers and prudent levels of ECL for our COVID-affected borrowers. The initial overlay adopted by us during the onset of COVID has greatly helped us to avoid volatilities. With regard to challenges, the increase in interest rates in 2023, as you all also aware, has affected all operators in Oman, which has strained the margins. However, our prudent and timely pricing strategies has ensured that we reduce the impact on our profits and bottom line. Having identified the volatiles associated with funding as well, we launched our perpetual bond for 25 million, as you're all also aware of, with a green shoe options of about 10 million in Omani. This will not provide us stable funding, but allow us to leverage this capital to increase our capacity for the additional borrowing. We have established internal risk triggers, which are well within regulatory requirements, which ensure that our growth path is both stable and safe for long term. I'm pleased also same time to announce that we at National Finance are in the process of analyzing 5 years strategies growth, which is consistent with our recent trend of growth and will take National Finance to even greater heights. Our results speak for themselves, and my team, management team, and myself assure our investors and yourselves that we continue committed towards all our stakeholders and the development of the National Finance growth. This is in brief. Taking, of course, the slides are very clear, talking about the same progress that we've spoken about a few years back and last year. And also the management team, as you all also know, will be introduced by Juma Khamisi. And also the shareholders, it was also last year, it was that we had a management, we had a change in the board of the committees and also the board chairmanship by Mr. Hani Zubair, and also deputized by Abdelaziz Al-Noushi. Yes, we still keep strengthening our team by having very experienced C-suite members, as we have also new joiners in our company. We have Honorable Dr. Shamsa Shibani. She was in Omni Invest looking after risk and as well as strategy. And of course, Her Highness Sayyida Wissam, she's the one also launched Bank Nizwa with her capabilities and experience. She's taken Nizwa banks in different heights, and we are honored to have her also part of our national team, national finance team. And I'll keep the floor. I'll let the floor for Jum'a to speak, to continue on the finance side.
We'll take you through a few slides after this introduction. So as shown in the slides, this is our top management. And we already covered this.
Go through it, yeah.
The top management of the company,
Finance.
the management team, and the board as already mentioned. Followed by the next slide. Here is our presence. We have 21 branches, and also I will move to the next slides. So this slide shows you we are the largest, as Mr. Farah says, we are the largest non-banking finance company in Oman with the market share of 47% and demonstrated in a track records for more than 35 years. The sector, the non-banking sector, financing sector had grown by 12% from 920 million to over 1 billion. So there is 12% growth. The sector as an overall had grown by 108 million. 61 of that growth is 61 million is contributed for national finance with a growth of 14%. So in terms of profitability, our share of the profit of the sector, we are 52% of the profit of the sector. We have 11.1 million, as the entire sector has 21.5 million. The bottom part of this slide shows you the remarkable track record of national finance since the inception since it is listed in 1987 until now. And the major stations I can highlight in this 2023, we have redeemed our first perpetual bond in March 2023. It was 18 million, and we are in process of raising another perpetual bond, which is still in the subscription period, and we will announce the result soon. If you see the bottom part of this slide, shows you how steady growth we are since 1999. And the remarkable step was when we acquired Oman Orex in 2018. So our books actually has been doubled. And from that, we have been growing organically. Yeah, now we will highlight the financial results. The financial result has been already announced in the market stock exchange, and I'm sure everybody had a chance to look at the financials. So our top been grown by 12.5%, coupled with net profit growth of 9.6. And the result, as shown in the slides, we have been very good growth. There is an increase in the funding cost. You see the funding cost has increased by 28 million. This is due to the growth in the portfolio. So we have increased our borrowing by 78 million. Part of that is for the redemption of the bond, and part of the rest of it is for increasing the portfolio. Our net profit had increased by 9.6%. Move to the next slide. This slide shows you how robust asset quality of national finance. So we have grown by 14% in our net book. So our net book grew from 425 million to 487 million, 14% growth. If you see in the right-hand side, demonstrate to you the high quality of the book. Our gross MBA had been reduced from 15.8 to 14%. However, our net MBA is at the 7% level. In the bottom part of the slide shows you the coverage of our bad books or MBA. It's 71 billion. We closed the year of 71 billion coverage for MBA. And if we consider the impairment reserve we have created this year, our coverage is 81%. The bottom part of the slide also shows you the profitability. We have managed to raise a very decent profit for our shareholders, 11 million riyal. This slide shows you the funding mix. Our capital structure philosophy stayed very prudent. We are at a gearing level of 3.8 times of our net worth. And I will not go in detail in this slide. If you have any question on it, you can come up. So you can see the funding mix. We have 106 million net worth, followed by fixed deposits 40 million, and the rest of our funding came from the bank borrowing, 217 in the long term and 135 in short term. In terms of gearings, we are allowed to go up to 5 times as per CBO regulation. However, we are in a level 3.8 times. If you see the bottom part of our slide, which shows our return on equity, we are one of the highest return on equity across the financial sector. We have generated 10.5 ROE for our shareholders. This is adjusted return on equity. And if you see the right-hand side, the prudence dividend payout for our shareholders, we are being always distributing very decent dividend to our shareholders. This year we get the approval from CPO to distribute 50% payout of our profit, and this is subject to the approval of the AGM, which will be happening at the end of this week. Moving to the next slides. This slide shows you what is our concentration and what we are looking at. So our concentrations nowadays is to focus on building our books. And we are focusing more on the retail portfolio and the small SME with the high collateral. Our strategic tie-ups continue to be there. We are building strong tie-ups with the major auto dealers. We give it the new cars or a second-hand dealers. In terms of digitalization, we are fully utilizing all the digital channels. We are being very active in transferring our company to digital platforms. New stream of income, we are looking to a new streams of businesses also. We are looking to new services, and we are enhancing our existing products. Branches, we believe that our network is very healthy. We are across all the country, and we are looking in all opportunity to increase our existence in the market. The bottom part of this slide shows you how to connect with national finance, and you are always welcome to ask any questions. So after that, I will leave the floor with Tarek for the message, and then we will leave the floor for the question and the answers.
Thank you very much, Jum'a, for the brief presentation and financials. If there's any also questions with regard of what was discussed today, the floor is open for the audience.
Any questions? Yes, please. Yeah.
Any questions? Yeah.
Yes, Mr. Karmani, can you? Maybe you are cannot hear you. Please go ahead.
I think he's muted. Is he? No.
Mr. Karmani, there is an echo.
No.
Another question? Fortunately, we lost the voice call. So any further questions?
In case if there's no questions, we can close the session.
Sometimes.
Yeah, but I mean, we can.
I think for what will be maybe.
Yeah, we give it another 5 minutes. If there is any questions or inquiry, we'll be happy to take them. Mr. Mukesh, if you have any questions, you can go ahead and ask.
Yeah, hi. Thanks for the opportunity. This is Mukesh Kothari from Jade Research. We are a company based out of Chennai and we track Middle East markets closely. Just wanted to understand what are the key drivers of growth going forward in light of the new regulations that were released around 9 months back, specifically for FLCs.
Sure.
He's asking about the growth. What is the driver of the growth we are seeing in business?
Well, I think as you're aware that we have 5 leasing companies in the country, and we've noticed after the COVID, most of the leasing companies have changed their strategy towards a very aggressive lending, especially after the COVID hit, which basically affected most of the financial sector, banking and leasing companies. But we can see and we can foresee that there's a big opportunity of growth and especially the government also with its injection of new projects that we've seen it now in most of the country, like in Muscat, in Salalah, Shaqiyah. I think there's so many in Musandam as well. So there's so much injection of cash with basically from the government, which drives the economy smoothly and also enabling these companies and us as a financing sector to grow even further. That creates needs and creates also financial needs for those companies to take from the leasing company or either from banks. But leasing company, the good thing about us that we are very flexible when it comes to finance. Yes, we are prudent when it comes to risk. We're very careful in our approach. At the same time, we do as well finance big projects. But this time, we make sure that we do take very strong collaterals before we approach any finance. Growth will never end in Oman. With the 2040 vision, I think we all believe that there's so many projects coming up. I think maybe myself, Mukesh, you noticed that this year and last year, His Majesty have started implementing the 2040 strategy according to the plan and according to the time frame. So yeah, we see that there's many projects lining up this year. And we can also see that the national finance and leasing company sector will grow according to what we plan. Yes, interest rates is there, but as I mentioned previously in my notes, that we have taken also our steps to deal with this increase and having a very, I would say, a healthy, I would say, spreads in our profits, our NIM. So I hope this answers your questions in a brief.
Yeah. I mean, that broadly gives a clear picture in terms of where the growth will come from. My next question is basically related to the cost of funds and what are the sources of funds. I understand NFCI recently repaid the bonds of repaid the when it fell due, and you are also in the market planning to raise bonds. So, what sort of interest rate are you looking at, particularly given the fact that the current interest rate cycle is on the higher side? So do you think raising bonds at this point of time at a higher interest rate makes sense from a margin perspective?
I'll pass this question to our CFO. That's okay with you?
Yes, actually, our aim from issuing another perpetual bond, we want to restructure our capital to buy because this is considered to be an mosaic equity instrument. So this will help us in actually getting more borrowings, and also it will help us in restructuring the capital. Regarding the interest rates actually it's yes, it is wrong, but we will manage inshallah to get the coupon of the interest rate within the acceptable range. Given that now in the sector of the banking, the perpetual bond at the rate 7.5, so we have to compensate our interest rate slightly higher than what banks can offer. But we are in the middle of subscription. I don't want to disclose more information just to give the rules, so we can announce it by the end of the week. So the end of the subscription will be in 28th of this month. So we'll announce it. And what we see, the demand is good in the perpetual bond. So you will hear about the news very soon, Sean.
The most important thing, Mukesh, as well, is the basically the spread that we maintain for the company. Now, yes, we know that there is an increase of interest rate, but also we've learned that the Fed's also planning to decrease the interest rate 3 times this year. But the good thing about it that we have maintained our NIM and our spread are very healthy this year compared to last year. So it was a good start for national finance this year, regardless, in spite the increase of interest rates.
Okay, fine. Thank you. My other question is basically with respect to, so you're basically saying that you're able to maintain the spread and you're able to pass on any increase in interest rate to your customers. I mean, if I understand that correctly.
True.
Yes.
Okay, fine. So see, but there's a limit up to which you can pass on the hike in interest rate, right? So when do you see the interest rate going down and I mean, the yields will have a cap. I mean, it can't go indefinitely. So what do you think, how do you think you can change your sourcing pattern to ensure that the cost of funds is low?
Yeah, actually, see, we show you in one of the sites, we are controlling our funding mix between short-term, long-term. We are trying to optimize the borrowing cost as much as we could. You know, in the market dynamics, you cannot control 100% your funding cost. So you need to have like optimal utilization of our funding. So to ensure that, as CEO mentions, we are maintaining our spread with a healthy spread Our spread always range between 5.5 to 6%, and it is a cycle actually. Now we are borrowing at a high rates, and when the borrowing rates goes down, we are taking the benefit of what we have lent at a higher cost also. So it is a cycle. So we come across many cycles during the last 35 years, and we prove as a track record we are still profitable, and our company is very solid, and we are the leader of the sectors now as we speak now.
Okay, fine. That clarifies. Thanks. Thanks a lot.
Thanks.
I mean, yeah. Thank you.
Joyce was raising another question. Yes, Joyce,
Hello, thank
can
you.
you go ahead?
Hi, thank you. But I joined a little late, so probably I might have missed some of the points. One of the observations that I had was on the cost of funds. See, in the last quarter, I've seen the cost of funds shooting up significantly to close to around 7%. So, what's the latest trend in the cost of funds and the liquidity situation that we have?
Yes, Joyce. Actually, as you mentioned, you are correct. It is with that range. Actually, the funding cost, we are expecting the funding cost to go slightly down. But given that we started the year with a similar trend, which is, as you have mentioned, between 6.5 to 7%, it's still high. And even US dollar is the trend as per the forecast and what we heard. Actually, it is expected few cuts during this year. As the CEO was mentioning, Fed was announcing there's expected to be like 3 cuts, 25 pips each. So that will help in reducing our funding cost, the Riyal Omani as well as the US dollar.
Okay. And also, there is a significant jump in the yield as well. So where do you see the yield is heading to? The reason why I'm asking this question is at 11% yield, probably the demand also will get impacted. That's my view on this. So, where do you find a balance between, maintaining a healthy growth while, at the same time, the borrowers will also be willing to pay probably, some kind of an interest rate that they can also be affordable. So, where do we see the balance between the demand and the cost of their borrowings?
Yes.
Right, go ahead.
So in terms of the cost, we have answered in multiple questions during this session. So the cost will continue like this. And as I mentioned to the previous question, this is a business cycle. We have seen a growth of the cost of funding is more than this even. In some of the year, it reached to 10%, and there's always a demand. Given that actually what we see in the economy, there is a lot of progress in the economy. We see a lot of demands in the retail sectors. There was some obstacle by the car suppliers last year, but now it has been released. We see very good demand from the retail portfolio. SME are also picking up, given that big projects given by the government. There is subcontracts also giving to the small SMEs. We see a big opportunity to grow, and that has been demonstrated in 2023. We have grown our book by 15%. And also our peers has grown in the FLC sector. They have grown by a few percentages. Some of the company double digit and some of them single digit. So the demand is always there.
Also, in addition to that, if I may add, is that we have also new products which basically were launched by the Central Bank of Oman, and they are basically personal finance, and the other one is real estate finance. So that tells you the capacity and the opportunity that still we have in the finance and banking sector in Oman. And this is also one of the additions that tells you how much the regulators want us to grow even further and bigger. And also there's more opportunities for the customers to have more variety between also banks and leasing companies.
Okay. Another question that I have is on the gearing ratio. We are close to around 3.8 times. But when we come with this perpetual issue, will it also be included in the borrowed funds, or will it be separately calculated? How is it calculated from the regulator perspective?
So actually, the new perpetual bond will enhance our gearing. Actually, our gearing will go down by 2.8 to 3%. So that also enhance our capacity to lend more and to grow further. Given that the regulatory limit is 5 times, so you still big rooms to grow.
Okay. And the cost of credit has been lower. Your second quarter has been very low. Third quarter, a little increase, and in fourth quarter also it has come down. What's the cycle that we are seeing, and where should we be looking at in terms of the provisioning cost?
Well, in terms of cost of credit, which we mean provisioning the ECL, we are actually holding enough provision. As we mentioned in one of the slides, maybe you have missed some of the slides. So one of the slides we mentioned, our coverage is 71%. This is without the impairment reserve. If we consider our impairment reserve, our coverage of our MBA is 80%. So we see actually we have created in 2022 and the earlier years some overlays. In 2023, we are holding as required by the ECL model, and we also have created overlay just to make sure that our prudent coverage will stay always there. And alhamdulillah, by 2023, we have actually managed some of the restructured accounts. And now what is remaining in the restructured portfolio is much less. We don't see much growth in the cost of risk, and it will be normal. What our expectation 2024, it will be normal. However, as a management, we are actually trying to be more prudent, and we try to make more actually provisioning to make sure that we stay in a very healthy portfolio.
Okay, so if I am from a modeling perspective, where should we be looking at now? From 85 to 40, and then where is it heading to, and what would be a comfortable level for you?
Just actually in our model, if you look, what we are 70% is what is cash provision. On top of what we have a cash provision, also we have a collateral because we are assist-based lenders. So we are comfortable with this level. However, when we have a chance to move it a little bit further, we will be always there. But what we have seen now, if you go prior to COVID-19, the coverage within the FLC sector was with 60 level, 50 levels. But now we are actually being more precautions actually. And we are maintaining 70%, and we will stay with that level. I will leave also the floor to Bikram if you want to add a few points in this. Bikram, can you go ahead?
I think yes, as Juma has mentioned, first of all, I mean, we are fully compliant with both CBO and IFRS 9 regulations. Secondly, we've also got on top of what the model throws, we've got some additional overlays in terms of being a bit more prudent approach. And also we regularly review our model. So our model was also reviewed last year by an independent consultant. So we keep on tweaking the model to ensure that it is in line with what the market and the portfolio is.
Okay, yeah. Primarily, my question was on the cost of the provisioning cost. So, what I'm seeing is 80 bips coming down to 35 bips or 38 bips. And the question was, where should we be looking at in terms of provisioning expenses as a percentage of the loans?
I didn't get your question, Joyce. We have replied to what you have mentioned as provision. So can you repeat the question again?
See, you're provisioning ECL provision expenses.
Yes.
So 2022 it was 85 bips. of gross loans. And 2023, it came down to your provisioning expenses came down significantly, and it has reached almost 35 bps of the loans. So, is this trend sustainable? That was my question.
Yeah, actually, it is sustainable. So what happened in the last year, 2022, what you have mentioned, we have created additional overlays for specific customers. That is not required anymore. In 2023, we have maintained what is required by the central bank and what is required by the model. So, and we see what we have done in 2023, it will be sustainable, and we will also try to create additional layers if we can.
Yeah, I got it. Sorry for the confusion. Yeah. That's it from my side. Thank you very much.
Thank you, Joyce. Thank you very much.
Thank you very much.
We will give 1 minute if there's further questions. Other than that, we will close the session. Thank you again, and inshallah we'll meet in the next half of the 2024, and we hope the result will be further higher, inshallah. Thank you very much, and thank you again for MSX to arranging this session and give us the opportunity to highlight our financials to the public market. Thank you very much.
Thank you.
Thank you.